What's good, everybody? Welcome back to the B23 Financial Academy. We hope video 2 has found you well. In video 2, we further expanded on what currency pairs are, the different types of currency pairs, what pips are, how you calculate them, what the spread is, and how it affects currency pairs and the markets as a whole. Feel free to go back to videos 1 and 2 to catch up if you're new. In this video, we will cover trading styles in the Forex market. Essentially, there's only two, which we will outline in the next slides, particularly the next slide. So there's fundamental trading and technical trading. As I've outlined before, there are two trading styles in the Forex market. Fundamental trading is trading based off the economic climate and certain news events related to a particular currency pair. And then technical trading is based off using on-screen tool that can be found on your MetaTrader 4 app or on TradingView, such as indicators, trend lines, horizontal lines, candlesticks, and etc. So fundamental trading, let's go further into it. Typically in fundamental trading, we aim to make as much profit as possible in a very short period of time, usually 1 to 3 minutes. Sometimes it does go into 5 or 10 minutes, but that's basically the time frame we're looking at. To do this, we enter the market using very huge lot sizes and either expect a huge profit or in most cases a blown account. You can use a stop loss to try to limit the damage, but orders in the Forex market and what they are will be explained later on in the series. So an example of fundamental trading will be shown in the next slide. So in this chart, this is GBP JPY, the Great British Pound against the Japanese yen, sorry. So in the turquoise box or rectangle that I've outlined, this is what a news event looks like, or the aftermath of news being released. This is GBP interest rates. So this entire price movement was approximately 900 pips plus. I think it was 1,200 pips if you add this candlestick, but I was just sticking to these four. So basically how news events work is this event was at 2 p.m. South African time. So what you basically do is, since no one knows whether the events will be positive or negative, you're basically guessing. So if you guessed correctly, you make a huge ton of money. If you guessed incorrectly, basically most often than not, your account is blown. Or you can use a stop loss to try to limit that damage, but the spread also comes into play here, and usually your account does not look good after a news event if it went against you. So in the example we saw, price moved approximately 900 pips plus. The reason here was because the Bank of England kept its interest rates at 0.10%. Say now they increased it, it might have been it might have affected the pound negatively, meaning GBP might have went down. But since the interest rate is still the same, it was viewed as a good economic decision by traders, hence why the price moved up so much. Different news events move differently according to the currency pair and that particular events, but that's a deeper level of fundamental trading. We will try to expand on it either here or on the Telegram group. So this is important information. The news events we trade in Forex are not the same news we watch on TV every day. There's levels to this. The news that we trade on Forex can be found on investing.com or forexfactory.com. You can go onto these websites and go to calendar. You'll see different news events there. So here's why people love fundamental trading, including myself. In the example we saw above, if you entered with a lot size of 2, you would have made about $1,800 in 8 minutes or so. I got this figure from multiplying pips, price moved by the lot size. This calculation was done in video 2 and explained. You can go back there to catch up if you missed that part. Conversely, if you entered with a lot size of 2 and price moved against you, most probably your account would have been blown. So yeah, here you go big, you go home. That's basically fundamental trading in a nutshell. And then technical trading. Technical trading requires more patience, discipline, and dedication. This is because you'll be using a variety of different tools, You'll be using a variety of different tools in order to make informed trading decisions based off of what you see on the screen. With fundamental trading, you don't know what's going to happen, you're guessing. Okay, I guess in both sets of trading styles, you don't really know. But with technical trading, you wait for something to happen first, then enter. With fundamental trading, you enter first and then hope for the best. These tools that you can use may be candlesticks only, trend lines only, indicators only, or a combination of everything. Basically, it's better if all the tools you use give you the same conclusion as to whether or not you should buy or sell. Like if you're using trend lines plus indicators, if both these two advise you to buy, it's probably a good trade, or it gives you a higher probability of playing out. Like if all three or if everything that you use tells you the same thing, then that's good. However, if two say sell and one says buy, you need to reevaluate your trading system, your trading method. As I've outlined before, fundamental trading is guesswork unless you have inside information or we have a new strategy that has its flaws. However, you win more than you lose. You do lose, but the losses are covered in your profits. And if I have to say, it's quite a good system. But there are ways around it. You can try to make one yourself, or you can learn from us. It's not really necessary. That'll just depend on you. So this is an example of a technical chart. In this chart, we have a horizontal line, we have candlesticks, and we have a trend line going down. As you can see here, the blue arrows signify buy opportunities or buy trades, and the maroon arrows signify sell opportunities or sell trades. For example, price was here, this arrow, this horizontal line, this price level. We call this resistance because price failed to break through it, and then price dropped. You can think of this as a ceiling. You bounce a ball in the ceiling, the ball bounces back down, you bounce it again, ball bounces back down, so on and so forth. And then here, the blue arrows are what we call supports. You can think of supports as the ground you walk on. You bounce a ball down, the ball goes up, bounce it again, goes up. And then occasions do happen where support breaks and where resistance breaks. But that's a different video. We will get to that later on in the series. So basically all the blue arrows signify supports and the maroon arrows signify resistance. And then the trend line, this diagonal line, is basically a horizontal line that's just diagonal. This is still resistance. Here, 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 here. Price failed to break through the line. It's just that it's slanted on its side. But the concept is still the same. The principles are still the same. So which is best? So technical trading is usually best suited for people who don't have a high risk appetite and are willing to learn something and stick with it for the long run. If you belong to group 1, that's good. Group 2, fundamental trading is usually best suited for the risk takers of humanity or people who don't mind risking around $1,000 to potentially make $5,000 in a matter of minutes. These people usually have passive income and can afford to risk a lot for higher reward. If you belong to group 2, that's good as well. It just depends on the type of person that you are, your personality. It's advised to know both I thought, okay, I was leaning more towards fundamental trading towards the late end of 2019. I had a knowledge of technical trading and I was murdering with it, but I just kind of switched here because I thought the end profits were higher than here. And then pandemic happened, which brings us to the next slide. So during the COVID-19 pandemic in 2020, news events did not move whatsoever at all. Like, it was a horror show for those who only relied on fundamental trading, including us. We were so dependent on news events and the fast profits that when news events didn't move, it was hectic. Luckily, we have extensive knowledge of technical trading, so we got by just fine. So for those making a decision on what to do, remember, okay, we hope COVID is over. We hope something like this never happens again. But if it does, know that news events won't move. So if you only know fundamental trading, it's not a good idea. It's advised to know both. So just to close, these are our contact details. The Telegram link can be found on our YouTube channel. And then here's our email address for any queries or serious contact details or inquiries, I mean. If you're interested in learning from us, you can contact this email or contact us on the Telegram link. The PDF or the presentation for this video will be found on the group. I don't think it's necessary for me to move on to the live charts. I think I'll do that in the next video where we outline what orders are, where do you buy, when do you buy, how do you know to buy. So if you found this video informative, please leave a like on the video, subscribe if you're new. It's Mr. Billionaire 23 signing out.